You're listening to an exclusive podcast of Gold Hawk Fights Back for You on AM 740 Zoomer Radio. Gold Hawk Fights Back for You airs Monday to Friday, 11 to 1 on AM 740 Zoomer Radio.
Been talking the last few days about some debt settlement companies all across Canada who play it fairly fast and loose with their clients, taking upfront fees, sometimes very big upfront fees, and delivering little or nothing in the way of service for their clients. The Liberal government is moving to change some of that situation by, first off, banning those upfront payments. Getting some reaction from that move, we have on the line Doug Jones from BDO Canada, where he is a trustee in bankruptcy. Doug Jones, thanks for being here on Zoomer Radio.
Well, thanks for having me on.
This is a fairly positive step, is it not?
It's a very positive step. The alarm bells started going off last year when the Financial Consumer Agency of Canada issued a warning. A number of media sources did articles and news pieces about the debt settlement industry and the problems they were creating. And so it's encouraging to see this reaction from the Ontario government.
The problem seems to be the upfront fee, and then following that, little or nothing in the way of real service or help.
It is. We see these people every single month. We see people who have been involved with debt settlement companies, and actually have some of the payment schedules that people have been working off of. And I have one in front of me right now. The person's debt was north of $50,000. They were told it could be settled for $18,900. But in the first 15 months, the settlement company took $5,400 in fees out of the account that was set up, leaving only $2,900 for the creditors. No creditor had been called in a year, and the creditors were commencing legal action. And the debt settlement company has no ability to stop the legal action. That's
just a scam, plain and simple, is it not? That one.
It's been referred to as an abusive practice.
Yeah, in the very least, it is certainly that. But can these companies, and we're not trying to paint all debt settlement companies necessarily with the same brush, but you bring up this one drastic example. But let me ask you this generally. What can these debt settlement companies really do anyway? Can they deal with the creditors effectively?
What they're trying to do is offer an informal proposal. So they tell you that the general approach is to stop making any payments to your creditors. Don't talk to them and don't make any payments, because they'll be more willing to negotiate a reduced payment if you haven't said anything to them in a year.
Mm-hmm.
They have you set up a separate bank account, which they access for their upfront fees, which is one of the problems. Then they let the money build in that account, and they try to go to each creditor individually and negotiate a settlement.
Yeah.
The problem is a lot of the major creditors aren't dealing with them. And if the major creditors won't deal with them, then they'll come back to you and say, okay, we've settled some of your debt, but the remaining debts we haven't been able to settle. And if you haven't been able to settle it, the interest has been building over the last year, and those creditors are now looking to commence collection proceedings against you, which can involve legal action to garnish a wage.
So you wind up as a client of one of these companies owing the same amount of debt, or maybe even more, and then paying these high fees to the company on top of that.
And the fees are up front, and that's what the government's trying to address.
Yeah. But the problem also seems to be when you talk about the major creditors, they don't want to deal necessarily with all of these companies anyway. That's really what you're saying.
What we're hearing from people that have come to us is that they've been contacted, but they've been paying a debt settlement company for a number of months, and in some cases in excess of a year. And one of the major financial institutions has contacted them and said, you know, we're here to collect the debt. They said, well, we're dealing with ABC Co., and the financial institution is advising them, well, we won't negotiate with them, so you need to pay us. And then that's leaving these people in a vulnerable position. And the advantage then, at least, is they can come to a place like BDO where we can actually negotiate a settlement through a consumer proposal or a bankruptcy, and we can resolve the problem.
But you guys do that. You advance these consumer proposals. You're in effect licensed to do that, not these debt settlement companies.
Correct. We are only a bankruptcy trustee can offer a consumer proposal or a bankruptcy, which falls under the Federal Bankruptcy and Insolvency Act. And to do that, you must be a licensed trustee, licensed by the government.
Mm-hmm. And that's a proposal whereby you might suggest to a creditor or creditors to accept a certain amount of money as an offer to settle all of the debts worked
Correct.
out. Yeah.
When we file a consumer proposal, by law, it freezes interest and penalties. And then we will negotiate a settlement, which in many cases is less than what you owe, and it's a payment plan over time of up to 5 years.
Right.
The other advantage to them is we only need a majority in dollar value of the creditors to accept it, and then there's a court order binding all of your creditors to it.
Okay.
So
but if I'm just Tom, Dick, and Harry from ABC Co. as a debt settlement operator out there, I can't do any of that, can I?
No, you cannot. Because you cannot file a consumer proposal, and therefore you don't have the rules that fall under that federal act.
Well, then what we're looking at here is not really what you would refer to as a business. You know what I mean?
The debt settlement industry started in the U.S. It is a U.S. model.
Yeah.
The U.S. government in 2010 introduced rules and regulations similar to what Ontario is now proposing. And so many of the debt settlement companies moved with their practices to Canada. Manitoba and Alberta have the legislation in place, and Ontario's moving there.
Now, just so people will understand, and for clarity, the whole debt problem-solving area, when you go to somebody like Laurie Campbell at Credit Canada, what can they do that's different from what you do as a trustee in bankruptcy?
Credit Canada is a not-for-profit credit counseling agency, and what they offer is known as a debt management program, or a DMP, and it is a repayment of all of your debt. They negotiate with your creditors to get your interest rate reduced, but
Right.
you will be repaying the full amount of your debt. They are not able to offer bankruptcies or consumer proposals. And so if you're unable to pay all of the debt, even without interest or penalties, then you move to the next level, which is having a trustee do a bankruptcy or proposal for you. The effect on your credit, they're all negative on your credit, but they do get you out of debt.
But the point is, if you go to Credit Canada and they try to reorganize your payments, as you suggest, they are able to deal with the creditors, and those nonprofit agencies are known to the creditors, the same as you guys. But the other bunch of people, the debt settlement people, so-called, they can't do that.
Correct. The debt settlement companies cannot do what we do. Credit Canada is, as I said, a registered not-for-profit credit counseling agency who are known to the creditors.
Yeah.
A little difference, though, in that when I do a proposal, I only need a majority in dollar value to agree to the proposal. Credit Canada still has to negotiate with each creditor separately.
Yeah. Only you by law can do the, I guess you have more flexibility, really, don't you? More flexibility, and you can have more impact on the indebtedness of a client.
We can settle for less than 100 cents on the dollar in consumer proposals.
Right.
Debt management program, by definition, is paying it all.
Yeah. Do you think that the number of people out there who are going to these debt settlement companies, at least from your viewpoint, because they often come to you after they've been there, that these instances are growing? Do you get that idea?
Yes, in 2012, it was growing. You can't pick up a newspaper, a flyer, listen to the radio, or watch TV without seeing an ad for someone saying they're going to settle your debt for a pretty outrageous settlement, 70-80% off. So they sound effectively too good to be true, and I think that's the message: is that you got to be very careful.
Well, and in my business and in your business too, nothing is ever 100%. Is it possible there are debt settlement companies out there who are able to be of some assistance, some service to their clients?
One of the debt settlement companies is advertising right now using some clients as testimonials in their ad.
Yeah.
claiming they settled the debt for some people, so I have to assume that in some cases it works.
Yeah, there must be in some cases people from some of the companies who are able to get through to creditors and in some cases work out a deal on behalf of their client. It must happen.
And I think what the government's doing in their legislation, though, that's very positive, is they've said, as a debt settlement company, you can still continue to operate.
Yeah.
It's just you can't get paid until you actually achieve a result for the person. So they're not actually saying don't go out there and be a debt settlement company. They're just saying don't get paid until you actually achieve the results.
It's very similar, and I don't know if you recall this, a number of years ago when loan brokers were in the marketplace and they promised to be able to get you credit, usually in the form of a credit card. Once again, they required an upfront payment and in many cases couldn't deliver the credit card because the credit card companies said no. The government moved in and said no upfront payments, and essentially these loan brokers have all but disappeared.
And this is what happened to the debt settlement industry in the U.S.
Yeah.
And so I guess the irony of it is if you say you can't get paid until you achieve the result, if that puts you out of business, you got to question the business model.
Well, that's what I mean. There may be no business there at all aside from just collecting upfront fees.
Yeah, I'm just, the legislation is as it is.
Yeah. If you have any comments or questions about these proposed changes to regulate debt settlement companies, give us a call, will you, at 416-360-0740 or 866-740-4740. Doug Jones from BDO Canada is on the line. Doug, it is still possible as well, and people shouldn't lose sight of the possibility as a debtor of going to your creditor and trying to work out some arrangement on your own. I think a lot of people figure if they fall behind in the payments, they're in some kind of trouble, that they steer clear of the creditor, and maybe that's not a very good idea.
No, absolutely. What you're talking about is an informal settlement where an individual says, I'm struggling, and they phone up their credit card companies or their banks or whoever their debt's with and say, I'm struggling. Is it possible to work out a deal with you? And there are some financial institutions who will negotiate with clients and say, yes, we'll lower your interest rate or we'll suspend it for a period of time and allow you to try to get some payments to us. Unfortunately, there's some others that actually describe to you that your risk rating has increased, and consequently your interest rate increases when you were looking for a decrease.
Well, in fact, that's pretty standard with credit card companies if you fall enough months behind, isn't it?
Well, if you fall behind, yes, they do increase.
Yeah.
But some of them, if you call them informally and say, look, I'm struggling, they will actually bring it down for a short period of time for you, where others don't. They increase it. So the informal settlements done by yourself, yes, they're available, but I got to caution that they are very difficult to put in place.
No, understand that. But it certainly runs contradictory to the advice from some debt settlements companies who say, okay, now you're signing up with us. Don't deal with your creditors. Don't talk to them. Let us do that.
Correct.
It's kind of counterintuitive to the advice that we're talking about now, I think.
And again, it's because their model is based on if you don't talk to them and don't pay them for an extended period of time, they're more willing to negotiate.
Yeah.
Unfortunately, many of them say, well, I'm sending it to collections, and the collection companies are going to commence legal proceedings against you. And that's where their model falls apart.
Well, once it goes to collections, I mean, there's very little opportunity then to negotiate, isn't there?
Some people can negotiate with collection agents because collection agents are looking to settle the debt.
Well, yeah, they want to get as...
but when they settle it, they want a lump sum.
Yeah, exactly, all at one point.
Gold Hawk Fights Back for You airs Monday to Friday, 11 to 1 on AM 740 Zoomer Radio.
11:33. I'm talking to Doug Jones. He's a trustee in bankruptcy for BDO Canada, talking about some new regulations regarding the debt settlement industry in Ontario that would, among other things, require the scrapping of the upfront fee that you would pay these companies in the first place. When do you know, though, Doug, if you're carrying a lot of debt? I mean, when do you really know when you should be knocking on your door or knocking on the door of Credit Canada looking for some professional help?
You should be looking for some help if you're having trouble making your monthly payments, if you're using one credit card or form of debt to pay another form of debt, if you're only able to make the minimum payments every month but you have to miss payments here and there, these are all key indicators that your debt is probably getting too high and you might need some assistance in managing it.
Well, even if you did that, you had a number of credit cards and you paid the minimum payment actually required, you weren't really in credit trouble with the credit card companies, but I would suggest you're in long-term trouble anyway.
If you're only making minimum payments every month and you have a fairly large amount of debt, you can be in, I call it the never-never plan because making interest-only payments never attaches to the principal, so you're in it for the long haul.
All anybody needs to do is look at that little spot on the credit card bill that will tell you if you make the minimum payment how many years it might take to get out of debt.
Yes.
Yeah. All right. Here's Barry on the line from Etobicoke. Barry, do you have a question for Doug Jones?
Yes, I was just going to ask Doug Jones whether or not there's a bit of a danger if you try to make informal arrangements on your own. For instance, say you went to your bank and said, I'm deeply in debt with a number of credit cards, and I'd like to make a loan to pay it off. I know somebody, actually, that the bank immediately shut off their line of credit.
Because they wanted a debt consolidation loan,
yes.
I guess is what you're saying.
Yes.
Yeah, so what they've done is they've gone to the bank and said, I can't make my monthly payments.
Yeah.
But they have a line of credit which requires interest-only payments, and there's no repayment of the principal. And they've probably been using the line of credit to try to continue to fund other unsecured credit cards or debts. And so what happened is the bank shut it down and said, given that you've told us you've got problems, we'd like you to get on a regimented repayment plan as opposed to leaving this line of credit with an untouched principal balance out there. And that is a concern.
Well, I mean, that's a good example then, isn't it, Doug Jones, of the possible perils of trying to do these things by yourself without some professional help.
That's why I said earlier they can be extremely difficult to try to do it on your own.
Yeah. Barry, thanks very much for that thought. That's an important point to be bringing up. Okay, let's go to Joanne. Joanne, do you have a question for Doug Jones?
Yes. My friend has taken the wise step of going through bankruptcy and now is in a position a year later to want a credit card again. How does she go about getting that?
Once you've been through bankruptcy, it's really important that once you're discharged, you try to start rebuilding your credit, and a secured credit card is a good way to do it. A number of your financial institutions out there will offer a secured credit card. It requires that you put down some down payment money, say $500, and then they're going to give you a credit limit similar to what you've put down. But if you go to the right ones at the major financial institutions, they actually report to your credit bureaus. So as you use the card and then are repaying the card, you actually are taking steps to show that you sought credit and are repaying credit, which is helping to reestablish your credit.
And
Thank you very much.
And that is the most effective thing you can do, is it not?
There are various companies out there that offer plans. I can think of one called New Me that actually offers to work with people over a 2-year period to help them rebuild their credit. They get them a secured credit card, they get them a loan, and then what they do is they work with the person over a 2-year period to have them making sure all required payments are made, and that does help their credit. So
all right.
You can do it slowly with the credit card yourself, or there are certain companies out there that offer a service to try to accelerate the rebuilding process.
Joanne, I hope that helps your friend.
Thank you so much.
Okay. All right. Bye-bye for
Bye-bye.
now. How much recidivism do you see in your business? How many people who you may help through a rough patch are back at it a few years later? Or do people really learn a permanent lesson by going through some of this?
There is obviously some repeat business. Hopefully it's not a couple of years. Hopefully it's many years down the road.
Yeah, right.
If it ever occurs. Because going through financial difficulties can happen for a variety of reasons. You can have done the best planning possible, but if you were self-employed and had an injury at work and could no longer continue to perform your job, your income took a significant reduction, and while you were planning ahead, you're now no longer able to.
Yeah.
So you could have got downsized at work. You could have had a separation and divorce, which created some financial stress. There's a variety of things that can cause financial insolvency, and so, yes, we will see some repeat business.
And in some cases, when they come to you, it leads to bankruptcy, but I'm assuming in many other cases, it does not need to go quite that far.
No, that's the advantage. A bankruptcy trustee, a lot of people say, I don't want to see a trustee because he's a trustee, I'm going to go bankrupt.
Yeah.
Over half the files that I do are not bankruptcies. They're consumer proposals, where we're able to avoid bankruptcy and put people on a repayment plan with no interest or penalties over a maximum of 5 years to get them out of their financial difficulty.
But I think a lot of people still, having not been through it perhaps, still view bankruptcy as the ultimate solution, a way to get out from under everything, and oh boy, what a relief, I should declare bankruptcy.
And we do see those people, and there's a lot of misconceptions of what bankruptcy means. And so I will have people who come in and say, I just need to go bankrupt.
Yeah.
But once I've explored their situation and I've gone over all their options for them, they learn that, you know what, that's really not the best situation for them. In some cases it is. But that's the advantage of what we do, is we explain every option from a consolidation loan to your bank all the way down to bankruptcy. What's the best solution to get you out of your individual circumstances?
Right. Okay, here's Virginia on the line. Virginia, do you have a question for Doug Jones?
Yes, hi.
Hi.
What do you do when you start getting a lot of abusive calls and mail from people you don't owe who feel that they can blackmail you into gifting them the money?
So you're getting demand letters from people that you do not owe any money to.
And phone calls from people I don't owe. And I can't prove it because I had a fire and the insurance cost everything.
So these are debts you did not incur, is what you're saying?
I paid off years and years ago.
Oh, I see. It's one of the, yeah, well.
If you've paid them off, I guess my starting point to those companies would be, I am not going to make any payments to you until you prove that I owe you money, because I believe I've repaid the debt in full. So I'm asking you to provide me with proof that I still owe you the money.
I've tried that, and they kind of say, well, they don't have to do that. A few of them are other ways. One is the insurance bought a fridge, brand new, which I discovered was 5 years old and damaged. And they are firing after me for that money. And I've told them, come pick the fridge up. I bought another one. So most of them are ones I've paid off, but a few are other things.
Well, Virginia, that's a lot of tangled finances there. I'll get Doug Jones, thanks for the call, to offer some general advice about that. When a consumer says, I need proof from you that I actually owe the money, the consumer is well within her rights, is she not?
Yes, she is. And in order for the creditor to take any legal action, they'd have to be able to provide those documents in court to prove it.
So they can provide them to the consumer.
That's exactly what I'm saying. So
yeah.
If a collector is not offering to provide you the proof, I'd be saying, well, until I have the proof, I have no intentions of dealing with you.
Yeah. All right. Here's Andrew on the line from Toronto. Andrew, do you have a question?
Yeah, Doug. It's good to listen to you. Listen, you just said something about a 5-year proposal.
Mm-hmm.
If you're into a 5-year proposal, and let's say you're successful going through the proposal, how much longer after that is your credit affected?
3 years after completion of your proposal, it's on your credit bureau that you did a proposel.
Mm-hmm.
Right.
But the
so
key, of course,
in essence, your credit is bad for 8 years now?
Potentially 8 years. Mm-hmm. Now, what the deal is, as soon as you are discharged from your proposal, to start rebuilding your credit.
So if you file for bankruptcy, your credit's only bad for 7 years. But if you file for a proposal and end up in a 5-year one, your credit's bad for 8 years, and you spend 5 years paying money to a trustee, I presume, right?
You pay the money to the trustee, and the trustee handles the distributions to your creditors.
Right.
According to the terms of it.
But Andrew seems to be hinting at the fact that maybe it's more advantageous to declare bankruptcy. I think that's what he's driving at, Doug.
Well, I'm just wondering, also, Doug, I'm wondering, if you file this type of proposal, isn't it a proposal in bankruptcy?
It's under the Bankruptcy and Insolvency Act. It is not bankruptcy. It's a consumer proposal under an act that includes bankruptcies under the same act.
You're not declaring bankruptcy by doing that.
Correct.
Yeah.
No, okay, so if you file for bankruptcy a second time, that proposal doesn't affect being second-time bankrupt then?
It's a second insolvency event, but if it's your first bankruptcy, it's your first bankruptcy.
Yeah, Andrew, thanks very much. And if you file that second bankruptcy, if you go bankrupt a second time, it's my understanding that never disappears from your record.
Places like Equifax say 14 years on your credit bureau.
14.
TransUnion says we'll keep it on. Equifax says 14 years on a second bankruptcy.
Right. Here's Margarita calling from Hamilton. Margarita, do you have a question?
I do. About 5 years ago, I filed for a proposal, and unfortunately, my father got sick, and I had to default on 3 payments, and I guess 3 payments and you're out.
Correct.
So all of a sudden, it was like I was back in shark waters, and the creditors started coming back to me for the money.
Yeah.
Yes.
I was fortunate enough to have some pretty good creditors who worked with me, and I managed to pay off the people that came after me. And that was great. The only question I have now is it's not easy to get back, like when you say rebuild your credit. My question is, I went to Equifax, and I'm sorry, I don't remember the other person.
TransUnion.
And I showed them the papers that I had paid everything off, and they took it into their files, I guess. But I can't even get a mortgage in a bank still, or I can't even go to the bank and get a real quote unquote credit card.
What you need to do, you talked about a mortgage. A mortgage company is going to look for you to have sought 2 pieces of credit and have had perfect record with them for 2 years after completion of that. After 2 years of perfect record with it.
Okay.
Before they're going to grant you a mortgage. So what you need to do is start with, do you have a car loan?
Yes, except I'm paying like through the roof compared to whatever's out there today. I have a mortgage and 2 car loans, to be perfectly honest.
Okay, so if the car loans are good ones that are reporting to the credit bureau, it's helping you. You need to get the credit card so that you're repaying on the credit card.
Right, and I have one which is called, when I went to the consolidation person first, before going to the trustee, I got one which you have to pay into.
Yeah, we were just talking about
and
that.
so forth, and that's working out well. Except it's just like when do I go back to the normalcy?
What you want again is you need that 2 years of consistent payments on 2 different loans.
Right.
Before you're going to want to reapproach the bank.
Yeah.
Okay.
And at that point,
and I still get rejected.
Well, then you got to keep trying, Margarita.
Okay.
I think wouldn't that be the best advice, Doug?
It
you
is.
Keep trying.
And there are some companies out there that I could provide information on that can actually try to help you look at your situation and see if they can help you rebuild it.
That would be perfect because it doesn't seem like even when I went back to my trustee, like they were going to charge me another $500 to bring up some paperwork that I understand I defaulted. There was a reason behind it. It's too bad for me. But anyway, I mean, I have paid these people off. I no longer
Well,
get
Margarita, I think the bottom line advice, thanks for your call, is still that you got to keep trying and perhaps, as you say, Doug Jones, find a company who could help you in that way?
There are companies that their mission statement is to help you rebuild your credit.
Yeah, okay. All right. Now, these changes that are being proposed by the minister, Margaret Best, are being put out for a reaction, I guess, into the industry, into that segment. Will BDO be reacting as well? How does that work?
Yeah, it's been put out until there's a date in February for comments from people who are in the industry. And so BDO, as a national firm, will be submitting commentary to it.
And so that means the regulations could be in place. Any thoughts on when that might happen? How long these things take?
That I don't know when they will get the legislation in place. I know that the date's near the end of February for commentary. How the government's turnaround time, I don't know.
Yeah. Doug Jones, thanks very much for all your helpful advice today. I appreciate it.
No problem. Thanks for having me on.
Bye-bye.
Okay, bye.
Doug Jones of BDO Canada. He's a trustee in bankruptcy there, commenting on new legislation that will be presented shortly by the Consumer Minister in Ontario, Margaret Best.
Gold Talk Fights Back for You airs Monday to Friday, 11 to 1 on AM 740 Zoomer Radio.